Trader Joe Teague joins us now for the Trader Rundown. A lot is happening in this market. Really have to buckle up here. Good to have you here.
Thanks for having me.
First thing, the jobs report is coming out on Friday. The stock market already has a case of the jitters.
Yeah, I said last week the market was distracted by what's going on with Washington, and that continues to be the case. But one thing that I'm noticing, the market continues to focus in on the economic numbers and the trade war, and they just seem to be a little more sensitive to the headlines of the economic numbers and the trade war. Of course, we got weak manufacturing data on Tuesday, and that really set off 2 consecutive days of selling on that weak data. I don't think that would have happened without the Washington distraction, and I think the market's really focused on what's going to happen on Friday with that payroll number.
And then the ADP number came out weak.
Another number that's light. We're starting to see more and more numbers that were light. Earlier in the year, we had maybe some mixed numbers, still some good numbers, some bad numbers. That's what happens in a slowing economy. When we start to retract, then we start to move into all the data being bad. So that's something I'm watching closely for. A big number on Friday to see the health of the GDP and the economy on a whole.
As you know, the theme of the market has been, at least up until now, buy the dip. Is that still the theme of the market, do you think?
Yeah, well, actually, a big thing happened this week. The S&P 500 broke its 50-day moving average. That's a key area for me. And when we're in the bull mode, when we're in rally mode, we just buy the dip. But below the 50-day moving average, I think we might be in a short-term bear mode and a bear market mode. We're going to look to sell the rip. So a lot of participants are out there looking for the market to pop, just so they can come back in and re-enter in a short trade.
Stocks versus bonds, what do you do here?
Well, unfortunately, bonds are already really high and they may not be a good buy right now. I don't think I'd really like either. I would need to own some volatility right here. I need to own some volatility with the market just to make sure that I have that hedge, because I'm not sure this time around if bonds are going to be able to protect my stocks, because bonds are already at a very high level.
Good to know. Thank you, Joe.
Thank you for having me.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.